silver is going to be one of the main ones in the space because to me it's clear when you have a gold to silver ratio at 80 plus right now, which is a historical high level, and you've seen gold moving the way it has been moving already. To me, it's a matter of time to see silver prices, really accelerating to the upside. Look at the production profile of them, the second largest gold miner in the world today. Their production is multi-year lows today, and in fact more than a decade low in terms of gold production. And this is the case across most of those major companies. They only been depleting their ore.
The well-known speaker Tavi Costa is discussing the potential rise in silver prices due to the current high gold to silver ratio, which is historically significant. As gold prices increase, silver is expected to follow. Additionally, many of the major mining companies, particularly the second largest gold miner, are experiencing decade-low production levels. This decline in production could further driven up precious metal prices, particularly for silver. The speaker Tavi Costa, a well-known portfolio manager at Crescat Capital, argues that in a gold bull market, copper and silver tend to follow, often leading in performance. Emerging markets, which have underperformed in the past decade, are linked to trends in commodities like metals and oil. As capital moves into the commodity sector, it impacts various areas such as emerging market currencies and bonds. They believe that inflation is likely to accelerate again, and central banks may struggle to control it, boosting the value of hard assets like gold, silver, and commodities overall. The speaker Tavi Costa highlights that in a stagflation environment, rising commodity prices drive inflation expectations. But the Fed's ability to respond may be limited. They argue that the US dollar is at risk due to high interest payments on federal debt, especially compared to other countries like Germany, Canada, and Japan. The Fed will likely need to cut rates despite inflation and recession risks, which could weaken the dollar relative to currencies like the euro. This scenario supports the case for hard assets like gold. Let's explore the video for more valuable insights. If you find the content helpful, be sure to give it a thumbs up and subscribe to our channel to stay updated with the latest information.
The silver, but at the end of the day, if you are in a truly in a bull market for gold, secularly speaking, then copper follows. It doesn't really matter the cyclicality aspect of it. You tend to see actually, a lot of times copper and silver actually lead the way to the upside. So if you could look at those ratios, they tend actually to perform better than gold itself. And the same thing goes for the miners. Another one that not a lot of people think about it, but it's highly connected, is even emerging markets. There's a reason why emerging markets have not done very well in the last decade or so, which is in line with the mining industry. It's in line with the oil industry and others. And now we're seeing that turning point, but they don't happen all at once. So you kind of see those, the beginning of it. So oil did very well, and then the metals and mining industry did, somewhat well in some parts of the market. And now you're seeing gold where it is, and central banks are buying gold, and emerging markets haven't really moved yet, but they're all interconnected. At some point, once capital really starts deploying into the commodity industry, it doesn't go to one place. It's sort of, diversifies itself in different parts. And so that's why all these things are connected. And ultimately, I think it drives all sorts of trends. It's emerging markets, emerging market currencies, it's probably emerging market bonds. It's going to be, the side of actual gold itself. It's copper, it's silver, base metals, energy, agricultural commodities will probably have a run. So all these things are probably going to be linked here moving forward. So this is why I keep myself, trying to avoid the noise and keeping myself focused. And the main question that I think investors need to ask themselves in this environment, because a lot of people focus on the recession question, which is important too. If recession hits, then copper will fall, completely. And the main question you need to ask yourself is, today, I think that one of the things that are most mispriced is the reacceleration of inflation. I mean, look what's been happening since the Fed cut rates. Inflation expectations have been accelerating again. If we do see inflation truly reaccelerating one more time, do you really think the Fed will be able to do anything? I think that's self-answer. I think most people know the answer to that. And what does that do to the case of hard assets? I think that's the most important question right now. And so, this is why I'm a big believer of this industry. in a stagflationary environment, basically what happens is you have commodities rising, causing expectations of inflation to rise. And then ultimately it creates also, the expectation that the Fed is going to do something about it. But remember, in this case, because of the debt problem, maybe the Fed doesn't have a handle on things here. Maybe there is not, maybe their actions are remarkably limited relative to other periods in history. Like I've been saying this, to me, one of the most important research that I found in the last, call it 3 months or so, has been this research on the dollar itself, because I think it adds to this case completely. And, if you think about it, what's been happening recently, I made the case for hard assets. I've been making the case for the last 3 years or so, but I've never made the case that is bearish on the US dollar versus other fiat currencies. And I actually think that case is here today. And the main reason for that is the interest payment on the debt in the US. Everybody knows it's high. But how is that relative to other countries? How much are we paying on the federal debt today and the local debt versus Germany, versus Canada, versus Japan? Because that ultimately drives the Fed's decision, and ultimately drives, because of the relative game, ultimately drives what happens with currencies. And so the answer is the US is way above all those countries. Now we're paying close to 4% and probably going to be approaching 5% in a year from now of interest payments relative to GDP. So if you think about that, the Fed is in an urgent need to cut rates, regardless of what happens with inflation, labor markets, recession. They have to cut rates regardless of all that. And if they do that, what does that do to the dollar versus the euro, one of the worst currencies you can think of? Because the euro has already adjusted that. So the Fed is actually sort of, lagging in that front.
The speaker, Tavi Costa, predicts that after inflation and the decline in the treasury market, the next major development will be the depreciation of the US dollar. This decline isn't just relative to hard assets, but also against other fiat currencies, particularly those from resource-rich economies, which may outperform the dollar. The speaker, Tavi Costa, suggests that while many believe China would become a dominant global economic power, its economy is closer to implosion, evidenced by widespread bankruptcies and government interventions. They emphasize that resource-rich emerging markets like Brazil, not China, hold more promise. The speaker sees the Chinese currency, yuan, as overvalued and expects depreciation. They propose a currency trade, favoring currencies from resource-rich countries like Brazil over the yuan as a potential long-term strategy. The speaker, Tavi Costa, acknowledges that after a strong recent rise in the market, a correction or consolidation is likely, which is normal. However, short-term trading strategies are not recommended, preferring to focus on long-term growth opportunities. They emphasize building businesses that can generate free cash flow over the next 5 to 10 years, driven by stronger prices in gold, silver, and copper. The speaker also highlights that silver's current price level is remarkable and expects it to rise further, with other metals potentially catching up to gold soon. Let's get back to the interview.
We saw inflation, we saw the treasury market fall. What is next? I think it's the dollar. It's the dollar depreciation is the next thing in line. And that's not just versus hard assets. I just want to emphasize this. It's against other fiat currencies, particularly the ones that have resource-rich economies that could potentially really outperform the dollar here. People are realizing that was the case. A lot of people thought China was going to be the new kind of emerging power in the global economy. Our view was implosion is closer to that than their leadership actually improving globally. And I think that is now potentially a kind of a conventional thought now. Now we've seen widespread bankruptcies. We've seen the Chinese government having to step in and purchase a lot of the companies to become state-owned companies, and all sorts of things, mechanisms to try to help prop up the economy. When I said I'm positive on emerging markets, I want to be clear. I said resource-rich emerging markets, and that's not China. We can all talk about China stockpiling things, but China is not resource-rich like Brazil is or other economies. And so to me, that's a big divergence right there. And I do think that the biggest risk of the Chinese economy is on the currency. It's we've seen a lot of this already translated into equity markets. I'm not sure I would step in and say I'm a I'm going to short the Chinese equity markets now down 50, 70% from its highs. That this is not the time to be doing that, in my opinion. Now, I think that maybe the currency is extremely overvalued and could see a lot of depreciation from here. And it has been appreciating recently, which is remarkable because it's looking at versus the dollar. But the more interesting one would be taking a currency view that is actually a currency trade or pair trade, where you're taking really a bullish view on emerging market like Brazil or India or something along those lines, although India is not a resource-rich economy. But let's use Brazil as an example, or Argentina currency versus the Chinese yuan. So that's that's an interesting pair trade. Well, it's not going to be a straight line, and we've seen a straight line recently, and so that's not what will likely be the case. I think we're due for a little correction or a little consolidation period. Absolutely normal to see that. And but I'm not the type of person that wants to be cute and try to either sell my position or trying to short the market just to try to make a quick buck on a little correction. I'm not a type of investor that's trying to call for that. I think that's just a waste of brain cells, in my view, and brain power in general. I think there's much better things to be doing and focusing on building businesses for the next 5 to 10 years that can really be focused on growth and could really generate a lot of free cash flow potentially in the next 5 to 10 years on the back of much stronger gold prices and silver prices and copper and others. That's where I think the big money will be made. But now that's just my 2 cents. And so, I don't think it's going to go up on a straight line. I think we're due, though, for other metals to catch up to gold. That to me is more interesting. The fact that we're seeing silver. Remember when we had this whole environment where silver, the silver squeeze movement, and also silver was all over the news and it was barely hitting 30. Right now, nobody really is talking about it, and we're 31, 32. And it, that's remarkable. If silver falls, 5-10% today, we're going to be, at oversold levels at $30, around $30. I mean, that is remarkable. Let's be honest. So, I think we're headed much higher, in my view.
The speaker, Tavi Costa, sees significant opportunities in hard assets like gold, silver, and copper, driven by factors such as rising inflation, limited Fed intervention, and the potential depreciation of the US dollar. They emphasize long-term investments in resource-rich markets, particularly emerging economies, while expressing caution towards China's economic outlook. The speaker remains bullish on silver, expecting it to rise alongside other metals in the coming years, despite possible short-term market corrections. How do you see the depreciation of the US dollar affecting global markets and emerging economies in the long term? Share your thoughts in the comments below. We'd love to hear from you. If you found this video useful, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.